January 27th, 2025. Starting a little bit early today as I have a couple things to do a little later. But anyways, I think today's a really interesting day, specifically because had you traded the 4 bar micro channel that I always talk about, you would have sold the close here, gotten them somewhere in here, sold the close here, lost, bought the close, lost, sold the close, lost. You probably would have gotten pulverized, or assuming you would lose this trade, you probably will. But that's kind of what happens on trading range days with that sort of trading. And I ended up doing very, very well today, specifically because I know this system very well and I know where it doesn't work. And what I ended up doing today, uh, I sold the close of 18, basically trying to front run, expecting that we were going to get some sort of follow through. So front run some sort of systematic trade. And I got out above 27. I exited a little bit below 10 during 24. I got it out the rest above 27. I bought the close of 29, considering the fact that the bulls who bought the close of 28 are now trapped on 29 and they might get stopped out, but they're going to try and defend their stops. And I know that I can buy the close, risk 2 or 3 points, and try to make 9 points. So my risk reward is 4-1. And it really only has to have like a 30% chance of success in order to be a little bit profitable. And I thought, 40% chance that the bulls were able to get the bar back to the bar 28 close. So I scalped out at the 28 close. I thought you could sell over here, but it was a third leg down. The big gap down is the first leg. This is the second leg, and this is the third leg. So I didn't really want to sell in here. I bought above 58, and I ended up scalping 2/3 of it at the bar 17 close during 60. So I got out up here because the bulls who bought above 17, it's not a good thing to do, but it wasn't completely unreasonable. So it wasn't, again, it's not smart. It's not likely to win, but it's a bull bar closing near its high. So it's probably going to get tested. And I exited the rest as 61 sold off. And the reason, this is the 4 bar channel that I talk about, but it's near the top of a trading range on a trading range day. So it's a better sell. Had I still been sitting here, I ended up walking away because I was up pretty good after that. But had I still been sitting here, I would have sold below 63. Why? Because I've bought this close before. And I know the bar that makes me think I'm going to get stopped out is 63. And if I think I'm going to get stopped out, I probably am going to. So had I bought this close, and then I see 63, I think it's a high probability we're going here. And so it's okay to sell below 63 for at least a scalp. And then when you get 64, you think, oh my God, 4 bar channel down, maybe we're going down. But no, it's big up, big down. Big up, big down is the most dangerous thing to trade breakouts in. And so it's probably better to just get out on the close of 64, or you could wait for 65 too, right? If you decided, well, 4 bars, I just want to see if it works. I don't think there's anything necessarily wrong with that if you wanted to hold for one more bar. But once you get 65, I'd probably just get out above 65. Maybe you can buy above 65 for a couple legs up, but kind of difficult. It's better to take the sells below strong bear bars closing near their lows and the buys above strong bull bars closing near their highs. Anyways, with that being said, I think the more that you pick a particular, you don't have to trade the 4 bar micro channel that I'm talking about. That's just the thing that I picked. Right, nowadays I do a lot of 3 bars, and obviously I do a lot of fading this sort of system and front running it and stuff. And so it doesn't even look like I'm buying the closes and selling the closes anymore. But there was certainly a time where I would have just, sold the close, watched it rally, bought the close, watched it sell off, sold the close, and just taken a massive loss on the day. And you have to do that. That's just kind of part of learning, is you have to, whatever system you decide to trade or however you decide to trade, you have to learn the environments in which that type of trading is very successful and the environments in which that type of trading isn't going to work very well, and then learn to adjust based on it. It's impossible to build a system that is just good. Well, I shouldn't say impossible. Nothing's impossible, but it's pretty much impossible to build a system that's just, very, very bland. That's going to work in every environment, because if it did, then there would be no one to take the other side of the trade. And so you have to get really good at figuring out in, whatever way that is that you like to trade, where it fails and where it succeeds. Is your type of trading, does it do really well on days like these and doesn't do as well on trend days, or does it do really well on trend days and trading range days gives it problems? What types of trading range days gives it problems? All these things are really important to know. Anyways, with that being said, we had a really large gap down today, about 2%. But the thing to keep in mind when we got it, let me pull up the daily chart. So we got the gap down and we were around 6,000. This is a really tight bull channel. And as nice, as good as it is for the bears that we get this big gap down, it's probably close to 50% of the rally, almost is very close to 50% of the rally. And it's really just the middle of a trading range after a tight channel up. So odds were we were not going to have a large bear trend day today, even though we did have a big gap down. However, the gap down probably still needed a second leg. Bar one, a huge bull bar with a tail on the top. I think maybe 40% chance that it's the low of the day. Usually is there's like very few. There's pretty much only one situation in which it's higher than 30% chance that this is it. You've seen the low or the high of the day. And it's something like this where you get a really large gap down and then a humongous bull bar on the open. But just because one is, potentially the low of the day, 40, maybe even 50% chance after bar two, maybe 50 to 55% chance, something like that we've seen the low of the day, doesn't mean it's going to be a big bull trend day. It could just mean exactly, this sort of thing. So just because it was possibly the low of the day on bar one, if you bought that close, your trade's at exactly break even 6 hours later. So it's a trading range, right? So even if you were correct on that 40%, the odds of us getting a bull trend are a lot lower than that. 2 consecutive bull bars, good for the bulls. We're going to get a second leg up from this. So traders probably going to buy the first bear bar. And then you get 3, a bear bar, but a large tail. Probably more traders willing to buy that close than sell that close. Although we did get a big gap down, and the gap down should get a second leg. Bars 1 and 2 are probably also going to get a second leg up. 4, rallies to around the close of 3. Probably sellers somewhere above, scaling and higher. Again, after the big gap down, it should get a second leg, but this should also get a second leg. So I'm expecting us to be in a trading range. 6, another bull bar with a large tail on the top. With the tail on the bottom. Overlap, 4, 5, 6. Not really worth buying anything in here. It just looks like a second leg up. 7, an outside down bar closing near its low. Am I selling the close of 7? I would not. I think that, after this and this, it's not really great to sell below 7. If you're going to sell below 7, you really shouldn't get any hesitation. You kind of want the market to just collapse. And I got a comment, I think on my last video about, a lot of swing trades get pullbacks first. And if you just exit immediately, you're going to miss a lot of trades. And that's true, but it depends on the context, right? If I'm selling below 7, I know I'm selling against a really tight channel up. I don't want to sell below 7 and then get hesitation. If I get that, I'm just going to get out of the trade. It's really not worth it. But in this particular example, if you're going to take a trade like that, you cannot see any sort of hesitation. If you're going to buy above a doji like 65 after this, and you're trying to make twice your risk, it's a doji bar and that this should get a second leg, and you're just basically betting your stop doesn't get run. So there, it's okay to sit through a pullback or two. I personally think finding the spots where you cannot sit through a pullback makes trading a lot easier, because then when you get the pullback, it's easy to just get out, right? When I'm selling below 18, I knew that I needed 19 to be a good follow through bar, because if it's not a good follow through bar, then it's just more trading range price action and I just want to get out. But so if 19 is a bull bar of any kind, I'm just going to exit and wait for the next trade. But instead, I get follow through. So now I know I'm getting a second leg. So now I can sit through a pullback. So I sold 18 and then I sold more on the close of 20. But when I'm selling more on the close of 20, I now know I'm going to get a second leg. I'm pretty sure I'm going to get a second leg from 18, but we're getting a lot of back and forth bars. Bull, bear, bull, bear, bull, bear. And then consecutive bear bars. So if we got another bull bar here, this just looks like a trading range. So you can sell these closes and expect the second leg down and be willing to sit through a pullback. It all just depends on the context. But I think the easiest entries, especially if you're a beginner, are the entries where the market just needs to go. It needs to move right now. Otherwise, there's not really, otherwise you just need to get out of the trade. Essentially momentum trading, right? So momentum trading, it requires discipline, but it's, I guess all trading does. Anyways, bar 8, disappointing. I think if you sold below 7 and you see 8, you probably get out of the trade. And that's probably what's causing the doji on bar 9. 10, another leg down, but 3, 7, and 10, probably not really, or probably 3 legs down, so not worth doing anything. Bar 11 is a big bull bar. Can you buy above 11? Yeah, I mean, you can. There's nothing really wrong with it, but you have to recognize if you're buying above 11 that this is a tight trading range. So if you bought above 11 and you said, I am buying the upper third of a tight trading range, but I know that I need a good follow-through bar on 12, right? Because if 12 is a disappointing bar, you just bought the top of a tight trading range and didn't get follow-through. You should get out. So I think you can buy above 11 and take a chance that we get good follow-through, but problem is the risk is big. You're risking 15, 16 points, and you're buying high in a tight trading range. So as long as you recognize those factors and you're willing to be quick to get out, it's reasonable to take the buy. 12, another follow-through bar. It's a second leg up. 1, so the first leg from 1 to 6. These are major legs, right? So you have to keep in mind major legs versus minor legs. On this move down, we have leg 1, pullback, leg 2, pullback, leg 3. But this is a leg too. It's minor three legs, 1, 2, 3, but it's a major second leg. 1, pull back, 2, pull back, and then this is the third leg. So learning to count major versus minor legs. I'll make a video on it at some point. I know I had a lot of people mentioned they'd like to see one, but I'll make a leg counting video at some point. I have no idea when it'll be though. It'll probably be sometime in the next maybe 2 months. Anyways, 12 consecutive bull bars. So if you bought above 11, that's a reasonable follow through bar. 12 does overlap the 10 high. Not perfect, not necessarily ideal, but okay. 13, 3 straight bull bars. So 11, 12, 13. We're probably going at least a little bit higher. I forgot to mention one more thing that I did today. I took a small loss on a trade I took in here. I bought the close of 46, and I wanted 49 to happen. The reason I bought the close of 46, this is important too. I'm just going to mark 15. I'm sorry, I'm getting very sidetracked today. I believe I was on bar 13 actually. I bought the close of 46 because I knew that these three, this was a leg 3 of the system. So I don't like to sell this close, but I can just sit and wait to see if we get a bull bar closing near its high. Let me back up. I don't like to sell this close because I know it's a third leg down. So I wanted to buy above a bull bar closing near its high. I thought 46 needed to close strong for the Bears if they had any good chance of going down, and it did not. So I bought the close hoping that bar 49, basically a big bull bar closing near its high, was going to happen on 47. And I ended up, obviously, it ended up not happening, and I just got out below 47. And it's fine that it went without me. If you're going to take a trade like this and then you get a bear bar closing near its low, you just need to get out of the trade. You can't just hold the trade and then hope it happens. That's just a really sketchy strategy. You shouldn't be doing it. And that's something that a lot of traders do. That's one of the reasons a lot of traders have problems with limit orders is they'll buy the close of 46 and not get out below 47, even though their plan was to get out below 47. And then every once in a while, 48 is a big bear bar and they lose a whole bunch of money. And you just can't have those big losses. Those big losses are going to ruin your account. Anyways, 13, 3 straight bull bars, but it's really high in the range. 1, pull back 2, or 1, 2, 3. Either way, you're buying too high if you're trading up here. 14, disappointing follow through. So if you're buying up here, you probably wanted a really good bar on 15 and 14 and you did not get it. 15 is the second leg up. So 1, pull back 2. Unusual that you just get maybe only 14, the exact statistic is 14% chance that your second leg is 1 bar after a micro channel like this that should get a second leg up, but it's a third leg. So it's really not as good. So maybe it's slightly higher than that. 16, a bear bar, probably buyers not too far below, scaling in lower. And then 17, a bull bar, probably sellers above, we're probably not going that much higher. We've had a few legs up and we had a giant gap down, back the second leg down. 18, an outside down bar, bulls who bought for any reason need to exit below 18. Follow through 19, so 18, 19 consecutive bear bars, expecting us to go lower. 20, another bear bar, a small tail on the bottom. You know that 11, 12, and 13 is probably going to find some support around the low of the bar because traders, in trading ranges like to buy the low rather than the high. So probably going to get a bounce at some point. 21, a bull bar, but not worth buying above. There's going to be sellers above 21 after 3 straight bear bars. 22, a large tail, probably going a little bit lower. Should get a second leg from 18, 19, to 20. Very high probability we get below 20, since the second leg should get at least 1 tick below the low of the first leg. 23, a bear bar closing near its low. You can add below 23. I added on, like I said, I sold 18 and added on 20, so I did not add below 23. But I think it's okay to add below 23 if you have a larger profit target. It might be a third leg, but you can pull your stop to the 22 high and just get out if you get a bull bar closing near its high. 24, another bear bar with a large tail, 3 legs down. You could argue it's a wedge. 2, 10, and 24. So, it's not really that great. Excuse me. It's not really amazing to be short here, but it's okay. 25, disappointing, a doji bar. And then an outside down bar, 26, but it's third or fourth leg, however you'd like to count it. It's a late leg. Bull bar closing near its high on 27. You can buy above 27, but it's probably best to just take the scalp when you get it on 28 and make a quick, 10-ish points, and you should just call that a day. Do you make 10 points? Let me just check here. We might bounce up to here. 10.25. So that's a 40 tick trap. So traders were 1 tick above, 1 tick away from making 10 points. One of the reasons I say we might bounce up here, well, we haven't broken out of the Globex range yet today. There's only 15 minutes left in the day. It's possible we get a vacuum test. Oh, no, actually, sorry. That's not what I thought. We haven't broken out of the 18 bar range. I don't think we get up here, but after these 4 straight bear bars, if you sold this close, it's a bad sell low in the trading range on a trading range day. So it's possible those stops need to get run. And this rally should get a second leg. So it's possible we have to get back up to this area. 29, a big bear bar, but probably buyers around this close. Like I mentioned, the reasoning already. And then 30, you can see it rallied and the bulls sold out of their longs. 31, a big bull bar. It's possibly a nested second leg trap. So a rally on 30, a pullback on 30, a rally on 31. So 2 legs up, 1 pullback, 2. 32, an inside bar. It's 2 big legs up, 27, 28, and then a pullback 29, 30, 31, a second leg. 33, so 32 is a low 2. 33 rallies to the 31 close and sells off. 34, an inside bar. It's possibly a wedge top. 26, 28, and 31. And then you have a reversal on 34. But it's a tight trading range. There's nothing to do here. If you're selling, you're selling a tight trading range. 35, disappointing. Doji bar. So if you sold below 34 and you get 35 as follow through, how do you feel about that? Probably not very good. So a lot of those traders are going to buy back their shorts pretty quickly, which is what causes the big bull bar on 36. Is 36 a buy the close bar? Not really. It should get a second leg, but it's the first bull close above the moving average. 37, consecutive bull bars. 36 is the breakout and 37 is an inside bar, so it's a high 1 buy. But it's not really that great to buy above 37 because you're buying in the middle of a trading range with large risk. You probably want to wait to see if we get another bar. We might have to rally back up into this area, but it's probably just better to see what we get and see if we get one more bull bar. And you don't on 38. Disappointment, large tail on both sides. 39, another large tail. So it looks like we're just starting to go sideways here. And then you can see 40 is a possible parabolic wedge, tail 38, tail 39, and then giant bear bar closing near its low on 40. Do you sell below 40? You just have to understand what you're doing if you're selling below 40. You can sell below 40, but if you're selling below 40, it's a third leg. 1, pullback 2, pullback 3. Meaning you need to be really quick to get out as soon as you're disappointed. Let me just sip water real quick. So if you're going to sell below 40, you want good follow through 41, 42. You do get follow through 41 and you do get follow through 42. But for me, that's not quite good enough follow through for me to hold on to the trade. 43, an outside bar, but a large tail. Not really that ideal. 44, a doji bar. Again, if I'm selling these closes, 41, 42, I'm hoping we're basically going to get a collapse, right? You're hoping that we collapse below the bear channel because we have the possible bear channel line from bar 2, bar 10, bar 24, and bar 42. So it's possible that we're going to end up getting a collapse. But if we are going to get the collapse, you want it to be happening right now. And instead, you're getting disappointing bars, 43, 44, 45. It's a tight trading range, and it looks more like a final flag than anything else. So not that great. 46, an outside bar, a doji bar. 47, a low too short. Not really worthwhile at the bottom of a trading range. Disappointment, 48, and then bears buyback shorts causing 49. 50, a reversal down. Okay for the bears, but there's a large tail on the bottom in the middle of a tight trading range. More traders buying the close. 51, a bull bar. And then basically, 52, 53, 54, 55, 56, is trying to decide the direction because the bears might need a second leg from their sell off to 42. But the bulls have a couple of early rallies and we might need to go higher. So basically, at this point, it's the first bar that needs a second leg that the other traders give up. And that's what you get on 58. Buy the close 58, follow through 59, a doji bar, a reminder that we might be in a trading range. But okay to buy the close 59. Some traders bought above 58. Some waited for 59, and then you get a big bull bar 60 right up to the 17 high, and that's where traders exited their longs. 61, an inside bar with a large tail on the bottom, probably buyers below scaling, potentially buyers below scaling and lower, but I wouldn't really want it to go below 61 because the reality is this is going to be a bull trend. It's going to go now. 62, a large tail on the bottom, but again, I need a big bull bar if we're going to rally here. And then 63, bulls immediately give up, and we get a big bear bar closing near its low. And that is possibly a parabolic wedge on a lower time frame. Down on 61, up on 61, down on 62, up on 62, and then down on 63. However, if you're selling here, we still should get to this low. So I think if you sell below 63, you have a very high probability of getting below the bar 57 low. But it's more of a scalp, right? So you're risking 10 points. You can just put your stop above 63. There's no reason it goes above 63 if it's going to get below here. you're risking 10 points and you're trying to make 8 or 9 points. So you want it to go immediately, which it does on 64. 4 straight bear bars after 4 straight bull bars, not really that great. 65, you could buy above 65, but it's really not ideal. I would want a better bull bar. And then you can see we get, 3 or 4 legs up, 1, pull back 2, pull back 3, pull back 4, and then we're getting a reversal. So the bulls here on 75, we're trying to get a breakout above the bull channel line, 66, 70, and then 75. And you can see it's obviously failing. So you could have bought, up here for a scalp, but you got to be really fast to get out. And I am personally not fast enough to get out to be taking buys. And I don't trade this late in the day anyways, but I'm not personally fast enough to get out to take trades like this because you have to be really, really quick because it can turn into a big loss. So I stay away from stuff like this. But for stop orders today, one is probably fine. The pullback on 2 is the bottom of a bull channel. So you could have theoretically bought in a limit order during 10, but not really perfect. You buy above 11 or 12, but not really great. We should go a little higher, but it's not what you want out of it. You can sell below 18. That's probably one of the better ones of the day. You can buy above 27, but probably a scalp. You can sell 23 as well. 40 is okay. 58 is good. Again, you just have to, be reasonably quick to get out. 63 is probably fine. Really interesting here, actually. The bulls who bought above 75, are they disappointed in 76 or do they think their premise is valid? So if you bought this close, how disappointed are you in this bar? If the traders start to sell out and we start to sell off, very unlikely we're getting up here. But it's possible that we race up and the traders who bought end up not exiting, and then we get a bull bar or 2 to end the day and get back to the 60 close. I'm not really sure what's going to happen either way here, to be honest. One of the reasons I'm not in a trade is because I'm not really that sure what's going to happen. It might be more neutral probability, but either way, should be interesting to see how the day closes. So the daily chart, a big bear bar, but a huge tail. It just looks like the middle of a trading range. So be prepared for trading range price action, probably for a lot of the week. I think tomorrow will probably be a trading range. As a reminder to everybody, it is FOMC on Wednesday. And so, when you're in a trading range and then you're going to get an FOMC bar on Wednesday, tomorrow should also be a trading range. So that's something to keep in mind. The weekly chart, a big bear bar, but buyers below here. And then the monthly chart's coming to an end. A decent bull bar, but the bulls would like it to close strong, particularly above the November high. So they want it to close somewhere in its upper third. All right, that's going to be it for today's video.